Hey traders, this is Christian from Tribeca Trade Group, and just a quick recap video for Friday, October 19th. I don't usually do Friday videos, but with the market moving as it did this week, and a lot of names reporting next week, I wanted to do a quick video just to kind of set up some thoughts for next week. Well, overall, I think a tough market to trade on a day-to-day basis. A lot of whipsaw moves going on. For the week, how did we end up? Well, believe it or not, the 5 day SPYs was basically flat. And I think once you look under the hood, which I will do next with sectors, you will realize why we were only flat for the week. Small caps also not that bad, only down. It looks like basically 10 basis points. So that's not that bad. The Qs were a little bit worse. Remember, last week was really the week that we saw the big volatility. This week it was more of a day-to-day type of thing where we were up one day, chopped another day, and moved down another day. So and here's the chart of the S&P. Again, I'll talk about sectors in just a second, but yeah, we're right around this 200-day moving average, right around the support. So if you look at IWM, small caps really in no man's land right now, deep below the 200-day moving average. And this is I think, is going to take some time to work its way through. And then the Qs, and I'll kind of give you my thinking for that. But the Qs are also just sticking right at that bottom of the 200-day moving average on the daily chart. So, a bounce, which I think we were absolutely due for, being very oversold. We got that on Tuesday. We failed, kind of making that next move higher and right back to basically where we started for the week. So that's why you kind of look at the numbers for the week, and it's a little bit of a head scratcher because we just didn't move that much from an overall net basis. However, volatility is still present, and we've got a lot of names that are reporting earnings, and I think really that's going to be one of the factors, one of the most important factors going forward for the next couple weeks. So let's just talk about sectors. If you look to see how this lined up, well, what does this indicate? Basically, when you've got this going on, the top five sectors were consumer staples. That got a big bid today with Procter and Gamble up a lot. But utilities have been there all week long. REITs, telecom, gold miners. This indicates risk off, right? When you have something like this, and then of course to the downside, the home builders just continue. If you take a look at that chart, which I won't bring up now, but just very, very ugly. The semiconductors, which saw a lot of put buying this week, down 2.3%. So you got a lot of problem areas in the market. And when you look at these higher, you call them higher risk or riskier, higher beta, higher growth areas. One of the things that I think is a positive at this point is everything is moving the same. People are really trading, I think, on a little bit of emotion. They're getting out of things. We're seeing a lot of sell programs come through, and there's unwinding of growth. So let this kind of take place. I've said this, I've phrased this a couple different times, but you don't want to be the only one who's buying the dip. You want to see the institutions. You want to make sure that the institutions, which seem to be selling right now and seem to be a bit scared, you want to get out of the way while they're doing this. And eventually, they're going to, I think, my personal opinion is there are going to be some buying opportunities in there. And you don't have to really go too far to kind of look for the buying opportunities. We're going to get a whole bunch of earnings reports, which again, I think right now, I could talk a little bit about what I've been doing, which is basically trying to sit on my hands, which is not easy considering I run an all-day trading room. So, if you see me or if you hear me not doing any trading, that's a very difficult thing for me to do right now, especially, telling people in the trading room, hey, I'm not trading much because I don't have conviction, especially when we see these sell programs just power through. It's just not the place to, I think selling into strength is something that you can do. But after yesterday, for example, moved down, we got that early bounce, but it's going to take a lot more for that to kind of sustain. So I just don't have confidence right now that the selling is through. You could see the volume here as well has been picking up. So let the sellers and I think some nervous investors, let them wash through a bit. But I think once we get through earnings season, you're going to be able to, think objectively about these names that are going to be reporting. Let's look for things that they say in their earnings calls, some data points, and maybe it's a new group that emerges out of this earnings cycle that may come into favor. So those are the kind of things and some clues that I'm looking for. And so while I'm not doing many swing trades, which I normally don't do around earnings time because it's a very tricky time to do a lot of trades. I do like to do from time to time some run into earnings trades, but considering there's this big, that there's decent sellers out there, it's really difficult to put that trade on. So that's why I continue to kind of say, be in a wait and see type of approach. And I want to wait right now until I have personally more conviction. And I don't have that. I've said that just about in every video that I've done this week is I just don't like what I'm seeing on the tape right now. So wait until you do. Eventually, those things will work its way through. A couple other things that I think are getting interesting is everybody saying the same damn thing, right? When everybody starts to say the same thing on CNBC, Bloomberg, again, I'm not singling any of these financial media companies out right now, but I have this stuff on all day long, and I hear the same thing over and over and over. So once everybody gets on one side of the boat and they keep saying late cycle, and all that, that is going to eventually wash its way out. When everybody says one thing, eventually the market will do the other thing. So I think that's going to be coming where the market changes from everybody unwinding growth. Also, if you look at the IBD 50 list, which I think is a real nice benchmark of growth names, because what they do in that list also is, there's various different sectors, right? So you could tell if you're looking at all these charts and seeing red bars across the board, these groups are just out of favor. They're all moving together, which does happen when volatility increases. A lot of stocks start moving together. So I think this is a short-term phenomenon. Just have to let it work its way through. The other thing to point out is, what comes after October, November, December. These are very strong seasonal months. So let earnings get through. We'll see who starts to buy back shares like crazy. That's something that you're going to hear in the earnings reports, what kind of buyback plans people are going to have, which should provide an underlying bid, I think, still to the market. And what companies are not using excuses. What's going to be the innovative and really companies that are going to be growing. So, sit tight. We're going to get all that in the next 2 weeks. It's going to be fun to go through and listen to these earnings calls and get all fresh new data points. So, if you've had a bad week or a good week, you kind of just wipe the slate clean and say, hey, we're going to have a lot of new things that are going to be coming up. Also, earnings trades. I mean, I'll continue to trade earnings because I think that there's going to be, when you get very negative feelings about the market, you get an opportunity to trade Netflix and make some money on it, or Netflix, or I was going to say PayPal, which we traded yesterday. I went 3 for 4 with earnings trades. I was highly selective because I don't want to trade everything. I want to just trade the names where I think could really set up pretty nicely. I looked at ISRG a couple times, didn't trade it because I just thought growth is just too far out of favor. But I went long PayPal, short AXP, and as long as you're setting up these trades appropriately, like we're doing with the right risk to reward ratios, the one loss is going to get wiped out by making much more than a double that we did today in PayPal. So there's going to be some fun stuff coming up for next week for all those names that are reporting earnings, and and I think just sit tight and try not to overtrade. Again, this video is just for informational purposes only, but basically that's what I'm doing, and not forcing trades. And really waiting for the opportunities to present themselves, and you'll know it. Don't worry. The just as I'd like to use a lot of baseball analogies, once you're seeing the ball, a lot clearer and a lot bigger, that's the time to really swing. When you're forcing things and swinging at everything that doesn't look that great, That's what you don't want to be doing. So anyway, I'll leave it there for the weekend. Have a great weekend, everybody, and I'll see you next week.